Okay, hold on a minute. Can you guys hear me now? Yeah, it's working. It's working now. Can you hear me now? It's working now. Can you hear me now? Nice one. Okay. Thank you. Thank you. There's echo. Is okay. Is this the echo? Is this the echo now? Oh no, this trade messed it up. This trade messed the whole thing up. We're waiting for this beautiful, although we had a very clean confirmation there. We had a very clean confirmation on the 4 hour. I should have just stick to that cell. Very clean confirmation this morning. We had a clean confirmation on the 4 hour. Oh no, oh no. Now you can see the 4 hour. You can see what I'm looking at on the 4 hour right now. And this drop already happened. So what we need is a pullback. Otherwise, we're not going to be able to trade it. So it shows that price will still want to drop, continue to the downside. So I think they want to just react to the, take out the market low, the previous daily low, and then before they rally up. And it's not a good thing. And I don't like that kind of setup. It doesn't work for me so well, especially when I know that I'm supposed to use that place as a target. So at the moment, oh, isn't that funny? At the moment, we're gonna wait for a pullback. So I already set an alert in that area. So let's look at another pair if we can find an opportunity. Whoa! Look at this. Let me remove this fair value gap stuff first. Okay. Let me just leave the fair value gap stuff. Remove the boxes. We are bullish on the 4 hour. This is a strong bullish. I don't know what's wrong with that stuff. So the question is, where can we look for opportunity in this area? And very pretty simple. The market opened this morning, and we had this massive. Oh boy, can you see that? Did you see what happened this morning? Anyway, let's stay away from SP 500 because until New York section, we're not going to see a valid push up. So let's look at some of you requested for gold. Let me check on gold. We can be able to get some stuff on gold today. Let me see gold. Let's use Rwanda. I'm not sure one that has a good data analysis, but okay, let's go with Forex.com. No. All right, let's go with Wanda. Wanda has been in the market for a while. Let's stick to Wanda. Okay. All right, gold. Of course, we're bullish on the 4-hour. There are two things here. Gold already pushed up this morning, though. Crazy. It already bought this morning. Let's see if we find a retracement coming in here. So let's quickly do our analysis on gold. So we have the swing high this morning, then the swing low. So we have a break of structure. So we have this level before the market open. Quickly, if we go to the 1-hour time frame to check, ooh, look at that. Wow. Gold already rallied though. I was looking at this area because this was the setup. Let me quickly show you what I mean. This was the setup. We are bullish here because this is the candle that just opened. So this was a candle this morning. So we're bullish already. Price was trading above this area. You can see that we are bullish on the time frame. So we're bullish. So it's obvious that we're bullish on the 4-hour time frame. So if you go to the daily, that is clear enough, isn't it? It's clear that we're bullish. So although there's consolidation, but it's clear we're bullish. So 4-hour was even explaining it better that we're bullish. So with that, I would have marked this high. Where's the previous day low? So we have this daily candle. Oh no. So we have this daily candle low. Which should be somewhere here. That's the daily candle low. So I would have marked that area and also target that place as a TP. So I've used that as my pre-market low, which is pre-daily low, previous daily low. And over here is the swing high of that candle. If you see over here, this is the high. So here is where they are targeting right now. Price is almost there. That's why I said gold has already run off this morning. And then we have the pre-daily high. So here is a strategy. There's the setup. So now I know it's bullish, but I need to create an opportunity here. So what I'm looking for is this market here, this one here, and that will be my pre-market high for now. This is not a live market. We're not. I'm doing a replay because it's already gone. So we have this low here as well. That would have been my area of interest to sell from. So we have the pre-market low. So if I go to the 10 minutes time frame now and show you something, you'll notice what happened. I'm going to just do a replay. So you see. So it's obvious that I wanted price to trade above because we're bullish on the 4-hour. Okay. And price is above the 50 moving average right there. And we're bullish. And price is below the 50 moving average. So I will wait. So in my analysis, very simple. I'll wait for price to break above. And when it break above, that means price is not above, confirming that price is above. So I will wait for a pullback into this area and I'll target the high. So let's see if that's what played out. Let's see if that's what played out on this gold. Okay. This is the way I'm looking to trade GU right now. So let's see that this is what happened on gold. So we want to break out a retest and then we'll continue. So let's see what happened. There was that, and then price is struggling to break, and then it pushed that displacement. So we have that clean displacement there. So liquidity, price took out liquidity there. Let's see if there's a pullback. Of course, this would have been my entry because there's a break here and there's a retest. This would have been my entry, first entry. If I was to trade personally without, I would have get in there. So let's see if there's a pullback. Okay, no pullback here. So in other words, this was the first entry that you have gotten yourself into. So this would have been the first entry. But as we see that price is doing this now, there could still be possible a pullback. So we need a proper pullback. But you see the break above, the first break, this candle, that's a bullish break above it. And if you put your volume profile out, you will see that that was a volume, high volume there. And then price came back, closed bearish and closed bullish again. For me, that's a go. I don't need to wait. If I hear that, see that sign, is a go. If I saw this on GU just now, I would have taken it. Then I'll target, put my stop loss a little bit lower here and target 1 to 2. So this would have been, or target this pre-daily, this previous today high. This would have been my setup for gold right now. But it can still happen. In other words, price may still pull back into this entry. So watch out for it. On gold, price may still pull back in if it does. But if it doesn't, you don't need to, don't force it. That's it. You don't need to force it. But there are imbalances here that price will come into. So the first one will be on this imbalance. So that means you might lose some opportunities to wait for price to come in here. So you take this imbalance level, which is fair value gap. So there's a clean fair value gap here. Or you might use this order block. It's up to you. But the question is, will price come to that order block? We're not sure. So it's not guaranteed. Not all order block that price respect. But fair value gap, yeah. Price will always tap into that fair value gap. Where you have that. So expect price to tap into that fair value. I'm not trading this gold, but this is a setup that you can trade. I'm not going to trade it because I'm waiting for trading GU. You know, I stick to one pair at a time. So it might come all the way down here, no problem. But as long as your entry is confirmed here and price come back to tap into this level and reject, because it will reject, it's telling us that we're bullish, confirming bullish on the daily time frame, on the 4-hour time frame. That's your theta. You're using it. You have to see a confirmation. So that's how the strategy works. Very simple. And then I'm waiting for a pullback now. So let's see if that happens. So if I put my fib on this area from here to here, again, you see the fair value gap is within that area of interest. So we can see that this one line up with the other block, which is 71, line up with the other block. So if I still, let me remove 38. 38 is not going to work it. Let's put 61. Okay, let's put 61 on the fib. So if you can see that, so it's almost lining up with the fair value gap, which is our entry area, which is clear. So you might wait for that to happen. You might wait for that. But if it doesn't come down, there's nothing you can do. There's nothing you can do. Trade already triggered, is already triggered. Just like GU now, that if it, except it comes back on GU, you see, price already take out the previous day low. See, rejecting at the pre-daily low. So at that level right now, we are thinking, of course, it's a sell market, but what if this is a double bottom strategy? What if the 4-hour is going to give us a double bottom and retrace? So that's another thing. Now, another thing I might do is risky, very risky, is if this candle close bullish and then close as a pin bar. If this candle, I'm on GU right now. If this candle close as a pin bar, I might decide to buy. I might decide to take a trade to buy it. I might decide to buy it. Why? Because it's trading against the trend. For me, that is counter trading. Okay, that's what it means. So I will long there. If it close pin bar, okay, I'll long there and target this high. Target the pre-market high and put my stop loss where it is, not additionals. I will still have 1 to 2. Another beautiful trade setup for me if I want to go with that. But I need to see how this candle close. I need to see how this. Why am I doing that? Because there's a fair value gap. There's a fair value gap here, over here, that price may eventually come to. But depending on the closure of this candle, if it close pin bar, I'll get in. If it doesn't close pin bar, I'll stay away. So I'm watching it because it's rejecting at the I wish price closed below the low of this week, this day. If price closed below, I'll wait for a pullback and I will still keep selling. But right now it's rejecting. It's rejecting there. So on the 4 hour, this could be a double bottom that is forming right now. That could be a double bottom. So if that happened on the 4 hour, that price is forming a double bottom, as you can see, a W pattern here is forming. Okay, there's a pullback on that, and then it start rallying up. Then obviously it's going to come up to this level and then before dropping again. So this one will become a liquidity area, and this one will become what? So that's why you have to be very vigilant whenever you see price reacting like that. So here, except price close below this area without rejecting, then we'll not be looking for trade. But it's a clean setup that happened this morning. Actually, we just miss our calculation of our entry. Actually, we didn't really miss a lot. It's just that the market decided to just drop. On GU, they decided to play on us. It didn't give us a proper break, except we go lower than the time frame. On the 15 minutes, there was a break, pull back again, rejected, and came back to break again. This would have been our opportunity to sell, but we were waiting for a pullback, and it did not. So it just kept dropping. So that's it. You don't force it. The system must work. You have to play with the system, walk along with the system. It's just the way it is. It's just the way it is. So let's see. This one is already for today. I'm not going to force this trade. I'm just going to watch. It's already dropped. So a pullback would be nice. If it break below this level, then the pullback will be valid. If it break below this level, mark what I'm saying. If price close below this pre-daily high, this previous day low, which is already doing that. If it close below it and close below it, then and it start pulling back, then the pullback is valid. That means price will still go lower in the sense that on the daily time frame we will have a lower, bigger candle. So that candle that is just closed with now on this 15-minute time frame, it's not valid enough for me. If you go on this time frame, you see it's not a great candle behavior. Although there might be a pullback from here, that's risky. So except you want to risk it, but I won't. And again, it's starting without leaving a week, so it's going to come back down. If this candle just rally, there's no wick at the bottom. Candlestick behavior. There's no wick at the bottom. If there's no wick at the bottom and it's pushing up, don't buy it. It's going to come on the way down. So you need to wait for that. There's no wick at the bottom. Okay, look at the previous candle, blue. Okay, the reason it stayed this green candle. First candle open. Guess what it did? It went down and then created a wick and then went up. You see, went up and then came on the way and closed like this. Then the next candle happened. Guess what it did? It left a wick at the bottom. First, it went up and then came all the way down and then closed like this. But this one opened without a wick at the bottom. So it's pushing up. Don't buy it. It's a trap. They just came to tap it. You see, now it's dropping. So it means that it's still going to come down to create that wick. So if it's going to come down to create that wick, that means it's going to close below any of this. So it's not ready. This retracement is not ready yet. It's still warming up. Okay, that's my take on that. And guys, you know what? I wanted us to smash this take, this drop. This drop was my no. Lesson to learn. Don't break even early. Don't break even early. Price knows when we break even. I don't know why the thing is just always there. I broke even early and price came to take me out and drop. Because I was on this sell early enough this morning. On this other block. I sold on this other block because I saw price drop and tap me in here. So I think I was in the 5 minutes time frame. Yeah. And that's the reason. The 5 minutes time frame really got me a bit concerned because it had this. It came up, tapped me in on this one, dropped. I was okay, and then came back up, and then when it dropped, I broke even. This was my problem. This was my challenge this morning. Not, you see, price was here. Let me show you what I mean. Price was here this morning, okay, on GU, and I set this other block area to get in. This was my setup. I said, okay, if failing to break, that means I'll try if it comes to this other block, and then I will sell, which I did. Okay, price came on that, tap into that other block. That was it. That my entry was at the middle of that other block, and it tagged me in. Guess what? It dropped. I was in profit, so I broke even. In other words, I moved my stop loss from here to my entry, and that was the mistake I made. And guess what it did? It came back to tap it up and take me out. And then now it dropped. That's the problem. So I get it. So it happens when you do it early. I hope you're learning. When you do it early, because I was risking 2%. So it was a little bit too high of a risk. So immediately was dropping. I took partial profit and I just break even. So I should have since I've taken partial profit, I should have leave the trade to just, play along. But again, lesson learned, because you have to always learn from your trades every time. Take a journal on it. So now that's what the drop is. So I just thought I should replay that for you to see, guys. Okay, now price is sitting here where we're supposed to have a TP. So at the moment, there's no trade set up, except it pulls back. Once we pull back, we see reaction here. We'll keep selling. We're not going to buy this market at the moment, except we have a breakup structure to buy. In other words, if price break this high, then we can start looking for buy on the 4-hour time frame. But as long as price is still trading below and is giving us the lower low, lower highs, we're still going to look for sell. So GU is still a sell trade. There's no buying yet. It's still a sell trade, because the candle that is forming now on the 15-minute, on this time frame, 5 minutes time frame, or 10 minutes, whatever time frame is not helping. I don't like the behavior of that candle. It tells me that price will still drop, and for that reason, I'm going to wait for the pullback to happen properly. So on gold, as we're looking at it, gold, we might still have a pullback. So maybe this might be the trade I will take today. Who knows? But we will have to wait for that to happen. So we have our stop loss about 73 pips. That's a lot. That's a lot of stop loss holding. But again, not too much. 73 pips. I was looking towards 30, but it's still high. It's still a long way down. And again, I could be waiting for price to come here just to minimize risk, and then target the previous high that it created, which is around here, to give me 1 to 2. I'll be fine with that, and not to be exaggerating. I don't know whether price is going to come up here or not. This candle might close. This daily candle might close inside bar, because you have the previous days the market has been really struggling. All right, so we have since on Wednesday last week, the market has been very, very, very difficult in making decisions on gold. For that reason, if I was going to trade, of course, it's bullish market. I'm still going to look for buy anyway. So I'm still going to look for buy. Somebody said I should explain the currency strength meter. It's very simple. Let me quickly turn it on. Oh, my tea is cold. I've been talking without doing anything about it. Okay. Right. This is currency strength meter, or whatever you call it. Why is it freaking like that? What's going on with my screen? Can you guys see that? I don't know why I was doing that. Let's go back to it. I'm not sure why I was doing that. Okay, so we're back on. All right, so currency strength meter. Here is the thing. When you use this stuff, you have to refresh it all the time because it changes almost very frequently. When the market, the currency is strong, you will see is very strong. You will see the bar increase, like JPY now. Okay, JPY is very strong. Okay, and then we can see that USD is also strong, but not that strong. But it confirms that upward there's an arrow showing that over time the market may rise. This bar may increase. The strength may get it may get stronger on that. But right now we have a full bar. That means the market is strong. This currency is higher, is stronger than USD. So if we go to USD JPY, for instance, as you can see, USD JPY, what do you see? The currency, which is USD, is the quote currency. Okay, now Japanese yen is the last currency. We can see that overall, even though the market looks bullish right now at the first few hours, is because the market is telling us that British pounds is getting, USD is getting stronger, as you can see. That's why for the time being, over now, the market is pushing up. But before that, we have a downtrend on the 4-hour, on the daily. And if you go to the 4-hour, we have this impulsive move to the upside, okay? So it means that JPY over time right now is beginning to rise. Why? Because USD is strong. USD is stronger than JPY based on the fact that, this is rising with an arrow up. That's one way of looking at it. But I don't normally use this. It's terrible. It's weak. I will just go to, I use my edge finder tool to get it. So let it load so that I can show you. We're going to use the same JPY as an example. I'll wait for it to load up. So right now you can see that it's about consolidation on the lower time frame. So even though it appears that it's pushing up, for today alone, the market is selling. So it shows that the JPY is stronger on a short term basis. So if you go to the currency strength meter, we can see that this is strong. So JPY is still stronger right now, today as we speak, within this opening market hour. So it's still stronger than USD. So for that reason, we are having a downward movement. You see, price is trading lower high, lower lows on the lower time frame because it's a short-term strength. Okay, that's how you trade it, but it's not guaranteed because you can see on the 4-hour we're bullish. So what is going on now is a retracement. If the 4-hour is bullish, then it shows that there's a retracement going on right now. So it means that there's a retracement going on JPY, USD JPY. So this retracement is what you should trade. So the question is, how do you do it? It's very simple. You put this is your swing low and this is your swing high. Okay? On the 4-hour. So you're going to sell all the way until price get to this level. So we have to mark that level on your time frame, which is somewhere around here. This is like 61. Let's say you're waiting for price to get to 61. So this is your 61 level around here. Okay, so I will mark that level of my 61, which is somewhere here, and I'll pat it there. So that means I can sell whatever I see, lower high, lower lows, lower highs, until price get to 60, this level. Once price get here, I should expect that it's going to rally. Period. So that's the way you see it. That's the way you should look at it. And whatever system you trade, as long as you can get the directional bias, never forget, go and watch my video on market structures. In fact, if you are joining me for the first time on this channel, subscribe to the channel. I don't know what you're waiting for. Everything I do is free. All of this is free. If you go to my link, there's a link on my description below. You will also find free course. I have a free course over 10 hours. You have free course of over 10 hours video that you watch that will teach you how to trade, how I see the market. Then I also have a course that is for sale. You see there, and it's $100, £100 or so. It's not expensive, £99. So you can take that course. That one is more specific because I deal with the things I do now, current information. So, but the free course is the one I've taught when I taught psychological levels, high and low of the week, counter trend line. I mean, watch those things. They will help you. So now you're looking at this breakup structure. Very simple. So what I do, this is a swing. If I was going to sell it, I would be looking for sell, depending on the strategy I want to use. But there is no imbalance on this one, so I won't use it because it doesn't make sense. There's no imbalance. There's no proper imbalance. Even though price still reacted to 61 at that level or there, it didn't give me proper imbalance. So except other block. Yeah, I see another block there anyways, but price tap into it and it's selling. So you want to see a breakup structure. We have breakup structure here before it rally up. So if you are not in this trade already, for instance, JPY, you wait for another breakup structure. So you want to see a displacement that happened, and then a pullback, and then you sell. Remember, this is your end goal. Once you get here, you are out. Any sell trade is done. Once you get here, no more sell. And it's risky. Price could reject at 38 as well. Remember that. Price could reject at 38. 38 is around here. So price could reject there. But we're not sure. So we just close our mind and say that, okay, it's going to go that way. So that's the way you see it. Now, if you're using Edge Finder, which is both fundamental approach to the market, I look at it as fundamental tools and sentimental analysis. This is the only tool I use for fundamental and sentimental, period. It is a tool. I bought it when it came out about 4 years ago, 3 years ago. Sorry, about 3 years ago, 2 years ago, it came out when I bought it. So I was one of the first candidate or student that bought it because it was my mentor, or it's still my mentor. So she's called Trader Nick. Okay, now I like his style of trading. I like the way he explains things, so simple. And then I was very captivated by that. So that's why I took him on board. I bought his courses, joined his mentorship group. That's a few years ago, about 2-3 years ago, going to 3 years now. That's early in my trading career, actually. So what do you see? Even on this top setup, you can see that it's confirming that USD JPY is neutral. Neutral means that it's consolidating. The market is not making decision yet. As you can see, that's consolidation there. That's retracement. Okay, it's showing us that there's a retracement consolidation. So on the lower time frame, that could be it. I understand that. So if I take that pair, for instance, and look into it deeply, just for clarity purpose, okay, just to express more clarity on it, I'll wait for it to come up. Okay, let's see what's going on GU right now. Okay, again, GU struggling to retain that low. So so now we can obviously say there's a retracement forming up. Okay, but let our swing high to be from here. That's better. It's safer that way. So you can see that if you retrace, is still in the area of interest. Wonderful. So we still want price to come there. But the question is, will it stay selling or will price, because if it pull back to this level, okay, that's nice. So it's very important to look at the 4-hour time frame to see something. I want to show you on the 4-hour time frame. Did you see this area of price action? Okay, this area of price action of 4-hour. All right, this area here. Okay, I'm gonna draw a line on it. Okay, that's the line. So I want to zoom in so you can see it. First of all, let me take out the fib so you can see the line clearly. Okay, that's the area. You see, this place, okay, is the worst case scenario we want price to get to. If it rally, if it retrace, that's the worst case place we want, this area. So if this 4-hour candle pull back into that area and reject again the second time, because it's a 4-hour candle, we still have 3, and guess what? Oh, nice. It's going to pull back. Nice. Did you see the candle? Look at the behavior of the candle. The candle opened here without a wick at the bottom, and then smashes all the way down to take our liquidity at this low, and now is rallying. So what is it going to do? We expect price to push back up, create that wick, and then close bearish again for the day. So I'm expecting that to happen. So this 4-hour candle may push up. We have 3 hours on it left. It's still a long way. It has a long way to go. So it might rally up, push up, and then swing all the way up, depending on the volatility of the market, the volume that we have, and then create that wick, and then close bearish for the day. It could do that. I'm anticipating that, but this is the area we're anticipating that price will come to. Or worst case scenario here, tap into 71. So retracement wise, that's what we're waiting for. Until that happens, there's no other trade. The opportunity we had was this drop. I was waiting to take this drop today, although I got in and then they took me out on a break even. So it is what it is. It is what it is, guys. That's straight for you. So I was trying to explain pro here. Okay, look at this JPY. It's very simple. When you look at this, you know what the market is doing. Okay. Now, the COT data is combined, and everything else, all of the metrics that you need to know about trading the market is here. The COT data is showing us very interesting thing. You look at this area, USD. Okay. The long position of the COT data on USD is lower than the long position of JPY. So that means we have the more commitment traders. The commitment of traders are buying more of JPY than they are buying USD. Yet, commitment of traders are selling more of USD, and then they are selling lower on JPY. So what does that mean? It means that there is no balance. So it means that there is a drag, a struggle in the market. That's why it gave us neutral in the decision. That's number one. Number two, you want to look at the retail sentiment. What is the retail behavior? Right now, retail is 47 based on long. Then retail on short is 58. So what do you think is going on? Of course, the minority win the vote, not the majority this time, because when you look at retail sentiment, the majority is not always the one that win the vote. So on this one, the market is bullish. According to this, the market will go up, but in a very slow pace because the volume is not high enough. It's not high enough. That means it's not low enough. That means we don't have a lower value. It's close to almost 50-50. You get it? So that means there's consolidation. It's close to 50-50. And that means if they are dragging by and say, what do you expect? On that pair, there will be up and down. So let's take GU, for instance. Let's take GU on that top setup again. This is GU. Where is it? It should be around here. Come on, where are you? Where is it? This is Euro USD. It should be around here though. British pound card. Okay. Let me just type it. Here is it. That's GU there. So I'll wait for it to load up and then I'll explain a few things to you. Like I said, you see, price is still reacting here. Now, this is a clear confirmation that price, that candle was still going to go down a little bit, as like I explained. So now, if this candle here, okay, close in 6 minutes time, it closed pin bar or doji or hammer, whatever it is, and it's bullish, hammer bullish. If it gives me that, let me look for my price action chart. Let me show you what I mean. Oh, don't start now. Don't start now. So let me show you what I mean here on my now I can't find it. I won't be able to get it now. It's gonna take me a while, and my screen is flickering. I don't want it to get to disturb it. I wanted to show you price action chart. Go and download it. Price action. Just look at price buy, bullish, bearish price action. You want to see that because I wanted to show you. I have books on it. I have materials that I use on it. There are a lot of this. This one is called chart pattern. You see, chart pattern. This one is candlestick pattern. Okay, candlesticks pattern is different from chart pattern. So let me show you what I mean by, because candlestick pattern, you're looking for price action. So this is candlestick pattern, and what you want to see around this here, this is what I mean. I'm looking for this kind of candle. You see that candle? I'm looking for something like this, that pin bar or this one, either that one or this one. You see the both. That's what I'm looking for around here. So if I see that happen, is a hammer there or a hanging hammer? So on a bullish market, this is what I'm looking for. You see, I'm looking for this on a bullish market. Do you see that? So if it doesn't happen there, I'm not going to get in. So you see what it's doing? It's still dropping. That's why I told you earlier on that this level here, until price close below this place, then we'll be looking for price have to drop more. So we already missed that push, this first drop, which was my initial target. Trust me. Every other thing here is no more interesting to me right now. I'm no more interested in what is GU is doing right now. Okay, let's look at GU details. All right. Why is GU selling? First, according to this COT data, we have British pound stronger than USD. According to this current COT. Now, normally every week, it happens every week. The reset is happening every week. We're supposed to get the latest one to change weekly COT report update weekly. So it's updating weekly. So I believe it is already updated. This is a new update, hopefully. So we have 70% against 50. So what does that mean? The big guys are buying British pounds more. That's why British pounds is bullish. That gives you an idea why the market is bullish. But it's still now dropping. Why? Because it's dropping based on the fact that the COT data is showing that the USD dollar is rising, is beginning to rise. But there is a condition based on consolidation on their sell. So we have that the COT data is shorting for 29%, which is on GU, which is okay. I understand that. So that's why it should be stronger. But the problem is the US dollars. We have community of traders, 50% of them are selling, are buying, and almost 50% of them are selling. You get it? There's a problem. So if US dollars is being, a lot of focus is being given to be buying and selling, so British pounds is going to struggle with it. So the problem is, what do we have as a retail sentiment? If you see the retail sentiment, it tells us, well, it's indecision because we have 50-50. So the market is neutral. So what will happen in seasonality over time? Based on seasonality in the past 10 years, compared to what we're at, where we are now, the market actually dropped from minus 0.59%. So if I take all of this information and I understand, okay, fine. So what is the gross domestic product release so far? Is -1. So, oh, it was lesser. So it's on negative. So that means what? It means also that the what do you call it? The gross domestic product of US dollars, or of this pair, because not just on US dollar, on this pair at the moment, two of them put together, is giving us a result. So we need to know how to now trade, because it's not giving us a complete result. The whole thing is indecision, neutral. I can't see a clear trade here, but I'm trading it. Why? Because I have to think outside just fundamentals. That's why technical analysis, fundamental analysis, and sentimental analysis, they are the three major blocks of trading. If you don't understand these three, you will struggle in the market. Period. So what I did was to use my technicals, because at the moment, what is telling me that I can't be trading because the market is consolidating. I said, well, that's not true. For me, I see on the technical analysis, the market is selling. So what does that mean to me? It means British pounds is losing weight, is losing momentum. It's been bullish all year round. All month rounds. If you check the daily time frame, look at that. The market has been crazily bullish all the time, strong. It shows that the COT data was right, okay, to tell us that British pounds is strong in the market. But right now, we are seeing this is the new update. The new update right now is that US dollars, we have more sell coming into the market and more buys coming into the US dollar market. So a shift is coming in. Retail sentiment, no decision. So I see. So if the market is struggling with that, so what will I do? I would rather stay with technicals for the moment to trade. So the only thing I'll look for is a retracement, because it shows to me if this is a struggle that they are now indecisive of the direction of the market in the fundamental and sentimental analysis. It shows that the market is about to retrace. So what they saw is a consolidation or indecision in the market, but we see that on technical analysis, the market is about to retrace. That means a retracement is coming. A break of this major structure is going to happen. And then when that happens, we have a new trend to the downside on the daily time frame, period. You see that now? It's so clear that it is clearer than the day with technical analysis. So with technical analysis, you don't miss it. You know exactly what's going on. So here we have price coming down now to break this low, which they will eventually do. But we are waiting for them to give us opportunity to get into the trade, because we don't want them to just drop like that without us getting into the trade. That's not good enough. It's very, very sad for them to do. We wanted to get into the trade. That was my goal. That was my target this morning, that low. So you see, it's already hit target already. That was the target for this market today. By now, I should have been done trading, not looking at anything else. I should have been done now trading. But again, that's what it is. It is what it is. So it's still opportunity to trade. There's still opportunity. Let's say the market closed below now. What are we going to do? We will still sell. But there's a problem. We need to be careful. One, there is liquidity here at this level. Okay, we need to be very careful with that. There's liquidity there at that level, and this could be risky, very, very risky. Where's my liquidity stuff? So there's a liquidity there. So we can see that is an imbalance also here. So we have fair value gaps, 1, 2. We have imbalance here, which is the obvious current one, which is fair value gap. Okay, on top of liquidity, pay attention to that. On top of liquidity. So what that means is that the pullback may come up here, may not come up here. May come up here, but may not come up here. So this is too far for price to come up. So it might be too far for price to really go down. So we should be expecting a sell opportunity around this level. But what if, does that fall into my trading system? No, it doesn't. It doesn't. So I'm not going to force it. It doesn't. Until price come in here and retest, I'm not going to get a trade. That's number one. So based on my trading strategy, I'm just teaching so that if those of you want to take the trade you want, if you want. But if price push up and take out this low and drop, I may not get in because the strategy I'm using here is different. It doesn't align with it. But if it come up here and reject, I'll get in. Also, I will sell to this low, or to this low, or to this low that it created today. If there's still opportunity for that, that's what I'll do. But if that doesn't happen, let's assume price close as it's rejecting now. It closed pin bar. That means a buy opportunity is giving me. I will jump into the buy. I will buy from here and I will target this high. I will get off from here because there's liquidity here. There's imbalance here. So as long as price is moving up to that area, it could tap into this area too and then drop, or tap into this area too and then drop. So that would be my buy opportunity, and also my sell opportunity from the top to the bottom. But as long as price is trading, and if it trade below this area, which is break below, let me show you. A price break below this area, okay, and then pull back, I'm very careful. My decision is they may come to this liquidity, and there is no room for me to put stop loss here enough. That is good enough. It's not safe. So they may come up here like crazy and take us out. That is bad. That can be so bad. It can be so painful. So don't force the trade. Don't force the trade. I normally will use based on the market trend, I will go with the pre-market high and low to take my positions. But because I normally use the pre-daily low, previous day high, previous day low as my target most times. The only way I would trade them equally is when the pre-market low or pre-market high is close to, is a few pips away from the previous day high and low. I can trade that. I will use both of them as okay, fine. I'll use it. I can risk that kind of trade. But this one, they are word apart. As long as they are word apart, there's no telling what will happen if this candle close right now in the next 3 minutes and close bullish, bearish, and then pull back into this area. I need to see a rejection, a clean rejection. And if it's struggling because of this liquidity level, I know they are creating more, so they will take it out, either to the upside, then before the drop. And I don't want to be trapped into that. So the real move has happened. That's my take. So everything else is like just taking the scrub from the market. At the moment, the setup is clear. And by 1 o'clock, you come back. I'm gonna look at the 1 o'clock. So by 1 o'clock, I will be looking for a continuation of this sell, and then that's when I'm looking at it. So let me tell you what to expect by 1 o'clock for those of you who wants to trade. 1 o'clock will be somewhere here. Okay, 1 o'clock. What time does New York section open? That's 1:30. British time frame, right? GMT plus 1. That's 1 o'clock, 1:30. All right. Some people will say 2 o'clock, but it's 1:30. But I think so. So 1 o'clock, between 12 to 1:30. So what I would do is I'll look at the previous from 11 o'clock to 1 o'clock. That's 2 hours. Okay. From 11 o'clock to 1 o'clock, I'll look for the high and low of that market. I would mark that high and low of the market, mark that area, and look for if price is going to consolidate in that area. For instance, this is 11 o'clock right now, candle printing. So this will become a low if it stays lower. This is the lowest. It might trade into this area and create a high. So let's assume this is the low now it's created, and then move up a little bit and play around and then create a high here. Okay. And then this become where price is. Now, at this time is 1 o'clock. At this time, I'm just giving an example. So at this time is 1 o'clock. You get it. Don't worry. If you stay long with me enough, you get it. So you mark this high and then you mark this low. So this area now become a consolidation zone. So if price break above that area, you will buy it. If price break below, because you expect it to break below. So if it break below, then you're going to sell. The question is where to. That's the point. Is it just here to here? The market has done the movement for the day, trust me. So the only thing I think it's going to do is just rally up and consolidate. And then if it's going to retrace further, and you might just you miss out. You miss out. I like trading the London section. I know it's clear for me. It's very clear for me. So I don't struggle with it. But when I come to New York section, I'm a bit struggling with what is the market going to do now? Okay, so that's exactly what I found on this one. So gold, again, one more time, did not come back for a pullback. I told you they're going to struggle with it because the move already happened. So it didn't come back. So the question is, how would you have traded this now? Since the previous day of gold is still high and the low, I mean, they are word apart though. How does, look at that. There's a massive pips away from each other. Don't just trade gold today. Wait for tomorrow. That's the best answer I'll give you. Don't trade gold today at all. Wait tomorrow. Let this candle close today. Let it close bullish or bearish, whatever. Let it give you a sign. And then you cannot look for a way forward. But at the moment you miss the entry, there's no way back. You just have to stay away from it. Trust me, it is ridiculous. Gold has gone. Missed it. The entry was very clean at this level, but we were not looking at gold. So that is going to hit that TP right there. Smash that high, then because they are imbalance. Look at the imbalance. It's coming to this imbalance. That's what it's coming to. It's coming to this imbalance to fill it up, and until it gets there, it won't stop. This fair value gap, until it gets there, it won't stop. So for those of you selling, you want to look at that area to sell, but be careful. It's a bullish market, even on daily time frame and on the 4-hour time frame is all bullish. So we have liquidity in this area. They might push higher. So be careful. Be very careful. Any question? I'm about to round up this section. So let's take, if there is any question you want me to take or any trade you want me to analyze, let me know. I want to do that quickly, then we'll go. I've done gold. JPY is nothing at the moment. The market is consolidating, so it's going to struggle a while, as you can see on the lower time frame. Of course, we have this displacement, this impulsive imbalance, and this massive fair value gap. Obviously, they are going to fill it up, and that's why it's retracing on the 4-hour. You can see that it's retracing on the 4-hour. As long as that retracement is going on, you have to be targeting previous low. So wait for a break of structure before you sell. At this moment, it's not clear. Market is consolidating. We need to see a break of structure. The first break of structure you want to see is this one, this low. And if you break this one above, if you trade USD JPY, because I know a lot of people trade USD JPY a lot, so I know about that. So that will be your range. As long as price is trading inside that area, don't trade. What other pair? Anybody saying, yeah, GDP, JPY. Oh, that pair, crazy pair. Okay. First of all, again, the same thing that is happening on USD JPY. We have a breakup structure to the upside. The market is bullish on the 4-hour time frame. Be sure of that. Have a clear cut of directional bias. The market is bullish. If you go to the daily as well, the market is still bullish. So we can see price just took out a recent high by this impulsive move to the upside. And then this one, it came back a little bit and then rally up again and break and close body wise above that. So it's a bullish market altogether. So, but why is it dropping here? Retracement is going on. It's because there's retracement on the daily at the moment. You possibly will be looking for price action to buy, because not to sell really, because this is the previous daily high, this is the previous daily low, and that's world apart, and the market already create that retracement. So if I see retracement normally on the 4-hour, I will definitely set the market to that place. It is it has already happened on this time frame here, as you can see, even before the market open. So this was the market open section. So you can see that price already retracing. So what I would have done is to mark that area where price created a consolidation a little bit, that area here. That would have been my pre-market low, I believe. And then price broke. So that would be this area here. So I will put my entry. That would have been the area I'm looking at. Yeah, this low. So that was a pre-market low. And guess what? Price broke and retest and came back. So we have this area here. Where was this time? That was 3 a.m. So pre-market low and high, it should be somewhere here. And then we have 6, 7 o'clock. Okay, good, beautiful. So if I was to use the pre-market low and high, that would have given me this opportunity here. So I have my pre-market high, okay, and I have my pre-market low. Okay, this is my pre-market low right there. That candle there. Say, how did you know that? Just pay attention, you get it. And what did the market do? Break, retest, closure. So this would have been my entry to sell, because I see a retracement going on. So right now you see this area, price already trade below that low by this drop. So I know it's going to retrace. So what I would do is on the 4-hour, I will put my fib right there and target to get out of this market for selling it at 61. So I will go and mark it on my lower time frame, that area. That's what I'm looking for. And then I'll look for entry here. So here, the short, this was a trade today. Okay, a break, and a retest. That's a retest, clean retest. So your stop loss was here, and you would target 1 to 2. And 1 to 2, price would have taken you to that area right now. So this would have been your trade. Depending on your area of interest, you can use psychological level. You can use the pre-market daily low, previous daily low, which is obviously somewhere. Let's get it on the daily time frame. So it's a long one. So it's a long way down. So I wouldn't even dare. So I would rather target the 60% level on the 4-hour. 61% level of the 4-hour. Of course, we have a lot of imbalance fill. You see, all this whole level got to be filled. So the market got to fill that thing. So let's see, that will be around here. So I will be targeting this area as TP, period. And that's very close. So every major pullback is an opportunity to add more position until we hit this level. That is 1, 2, 3 risk reward. So this is the setup for that. All good on JPY. So if price pull back up now, what do you think? It's very simple. It's pulling back up now. That's called market structure retracement. As you can see, a break of structure, another system. This is a trading system of Fibonacci and imbalance. Okay, so you watch that break of structure using market structure. Watch that break of structure, and then there's a pullback going on now. So with that pullback, what do? Where is the swing high? Where is the swing low? Which one broke the structure? This push broke the structure. So this is the pre-market low. So you don't want to use anything than that. And then you target another beautiful entry is about to launch on this pair. So 30 pips stop loss, targeted 1 to 2, 1 to 3, depending. So this is what GDP JPY. So yeah, this is a good setup to trade. And then extreme order block, we have an extreme order block level here, which is here. So you can tap, you can look at this order block right here. So worst case scenario, they might tap into that area and then drop because the market is still retracing. So I'm looking at the 4-hour behavior to know. Did you get that now? So that's a simple way of looking at it. So this push up now, it's not like the market is, of course, the market is bullish overall, it's a bullish trend. So you will see all this spike. That's why I tell people, don't trade against the trend, because you might have this drawdown and say, what? I mean, you are in profit, all of a sudden the profit is being taken away. Because the market is bullish. The market is bullish overall. Check the daily time frame. The market is bullish. It's telling us that it's a buy market. You should be careful selling. The market is bullish. It looks at GU is retracing. Okay, I'll look at it. Of course, it should be. Look at that. You see what they did? One candle to target that liquidity level. One candle is to target that liquidity level. One candle. But we know it's a bearish market. GU is bearish. It's not bullish, because we can tell on the daily price is trading below. And of course, it's still a major discrepancy. There's a struggle within. The daily is not confirming a pure bearish market yet. When you use the 5 minutes as a guide to market shift at the other block, it could be market shift. Let's see. Oh, sorry. Let's see this one. It could be, possibly could come to the other block. Maybe not. Maybe this one is a bit too. I think coming to this level, I'm personally concerned. I'm concerned about that. There's a minor fair value gap there. I'm concerned about that though, because there's still another fair value gap up there. So this primary one may not hold. It may not hold, but obviously we can see price rejecting this low, creating a new low. So personally, I would have loved to buy the retracement, but I'm careful because the market might eventually swing all the way down again and continue selling. But it didn't give me the right opportunity to get in, so I'm not going to trade it. Is it advisable to counter trade? That's the thing. That's what I'm saying. Be careful. It's not, I don't advise it, except you know what you're doing and you are willing to risk the money. If you're willing to risk the money, that's fine. Just counter trade. But again, risk it. Why not? If you want to risk it. So we have displacement. Let's see that price coming to the fair value gap. Okay, that's a push up there. So is it going to come? If you wait for a pullback, you can buy. Okay, pull back into the middle of this one. Put your stop loss right there. And then target that other block. But if it doesn't pull back, I don't want you to buy there. If it doesn't pull back to that level, in other words, you can have a buy limit here. But it doesn't pull back to that level, because you need to look for that middle ground between that level. So if you get in on this one now, there might be a drawdown on you. So let's see a pullback and a rejection again. This is just the confirmation that price is trying to go up. And there's liquidity here anyway. It's drawn to the liquidity. So personally, I'll be careful trading this. But right away, it's a sell market. So two things involved. If you're not comfortable trading it, buying it, personally, I'm not. I won't want to go there, because I would rather sell according to the trend right now. then I will look for a drop. I'll look for this impulsive move to the downside, and I'm looking for price to come up there. So if it does, then that means this is a good trade to look forward to around that level. So an entry has been activated now. Let's see. I think I'm going to get in. Let me get in. I'm going to get in on this trade right now with just a simple lot size. Okay, I'm going to buy where it is right now. Okay, I just got in on a buy. As you can see, I just got in on a buy right now. You see, 1.66. Let's see what it does. I'm risking just a little bit of price in that. You see, you see what it's doing? You see what it's doing? You see that massive drop that it's doing? That's the problem with it. That's it. That's when you counter trade. That's what you get. But maybe it could go in our favor. Who knows? Again, there's another block I'm looking at. Instead of just talking, let me put my mouth where, put my, what do they call it? How do they call it? Put your mouth where your money is, or put your money where your mouth is. So that's why I got in on the buy. I just got in on the buy on that. Because I'm telling you, let me just do it. So I'm on it. Let's see what happens. So I'm going to target this high, and let's see what happens. So far, we're in profit. Hopefully, it's dropping again. Crazy. Yeah. If it closes below that level, if it closes below that line, that red line, I'm gonna get out of it, because when the sellers are pushing price, they're crazy pushing it. If it closes below this red line, I'm out. Okay, it didn't. Okay. So I'm expecting them to take out this liquidity, because it's attracting them. It's pulling them in. I don't like the way the candle started. There was no wick at the bottom. I'll play around a bit. So let's see what's going on the other time frame. Okay, that's a good rejection here. Let's stay on this time frame and see. So I'm putting my stop loss at this low. Okay, stop loss at this low, just in case it gets awkward. Here's my stop loss area. There. So I'm going to put my stop loss there, just in case it get awkward. I'll get out quickly. Oh, struggling. Yeah, struggling. Struggling at that level. It's a wrong decision though, but I just wanted to prove a point to you guys to see that, you know, you don't trade against the trend. Trust me. You see what it's doing? And if it close below that, it shows that it's not ready to go up. Below that, if it closed below that red line, it shows it's not ready to go up. And which is his intention. Is intending to do that. And that's it. Tapping into the other block on 5 minutes. You see this candle. See that? Yeah. Yeah, I'm going to close it. I have to close it. Okay. You just tap into the other block. Whoa. Do I consider a weak or body closer as a break of structure? Depending on everybody have their own way of looking at it. But for me, I use both. I use both. Don't buy this market. Don't buy it. I've already closed the trade because it closed. I told you when it closed below this red line, I'm out. So it closed below the red line. Don't buy it. Wait for breakout structure or something. If it breaks structure to the upside, then that's fine. If it doesn't break any structure, if there are no structure break like this high, a break of this high, do not buy. Wait for breakout structure, and then we can look for a continuation. But at the moment, there's possibility that if you look at the 4-hour candle, there's possibility that this candle will want to stay down for now, a little bit lower before it goes up, and it's going to play around for a while on that. So don't buy. Should we sell it? No, I'm not going to sell it either, because the place where the price is not nice. I don't like it. It's not nice. Well, guys, tomorrow we're going to try again. Today I'm done. I'm not going to trade anymore today. Tomorrow we're going to try more. So tomorrow, ensure you join me on live stream, and we're going to take it from there. Thank you so much, guys. I'm out, and I will see you tomorrow.